Vancouver home prices are officially dropping. Yep, you heard that right. The average price of a Vancouver home has officially started to drop. We have peaked here. And, let's look back a little bit. We're talking about the very end here of a 27-month bull run, which started back in December of 2019 and has seen prices increase by 38%. When this started back in December, HPI price for a Vancouver home, $988,000, under a million. And today, $1,360,000.
Wow.
Yeah, so obviously a pretty incredible run. The last 2 years, as everybody knows, has seen just these exasperated prices and record sales volumes. Let's quickly look back to the last bull run that happened because it was a big one as well. It started in January of 2013 and ran all the way to May of 2018. 5.5 years.
Wow.
That saw an 85% increase in home prices. Tremendous.
That's huge. 85%.
Yeah.
I mean, 5.5 years though, I remember that, but also at the same time, 38% in 2 years is even worse.
It is. I mean, it obviously resembled that 2016, 2017 part of the tail end of that run. That we know that the government stepped in and put on some suppression measures, right? That was the stress test, that was the foreign buyer tax, that was the increase in school tax and PTT, and it obviously had a big effect. And yes, interest rates were increased then as well. But let's talk a little bit locally here. Or not locally, recently. So we're seeing this thing come to a head here now. And Ryan, let's talk a little bit as to why. Why is this thing kind of stopping right now? And I guess it's the first one and the most obvious one and the most impactful one is we have seen the Bank of Canada start to increase rates.
Oh, I thought you were going to say the cooling off period.
Yeah, nobody knows what that is yet. So
not even the government.
Yeah. Hard to have effect when, it's just a big, huh?
Well, even to your point, I mean, it's the government reacting honestly way too late to a problem, much like they did before, right? To try and cool off the market. But this time, it's mostly rate hikes that are causing, they have a psychological impact on people, right? Especially when you double down with inflation, right? When you add those two together and, really high prices for everything right now, their discretionary spending is coming to a close, right? People are going to stop spending money if they don't have to. And that also is going to be indicative in the real estate market. I think we're kind of in this interesting period where we've definitely crested. The market is now starting to look very different going forward versus where we were even just 6 months ago, even 4 months ago. It looked quite different. So the change is happening pretty quick. And I mean, there's a lot of reasons why, a lot of things affecting this. We'll touch on it in a little bit too, but people are losing a lot of money in the stock market too. I mean, it's the worst month on record since 2008, which is crazy, right? So if you've got money invested in the stock market and you were going to take some out, put it into real estate, that's probably not happening right now. Right. So everything is growth is slowing down.
Yeah. And I think this is largely too because of, I look at the South, look at what the Fed is saying, and they're saying they're going to be attacking inflation strongly. Mm-hmm. And so people are getting ahead of their announcement of how much of a rate hike they're going to make. And of course, that is affecting directly things like the stock market and the tone too, right? Buyer confidence is going down very rapidly as well, because here we've got the Tiff Macklem saying, look, a 0.75% hike is not off the table all of a sudden. And I mean, when's the last time they did that big of a jump? I mean, I'm not even sure if they have. I haven't looked this up, but I think it's a massive and again on the tails of a 50 basis point hike back to back here, and off of a quarter point before that. So 3 in a row. As much as a full 1.5%. It's huge.
I mean, they're using tones like, they're prepared to forcefully combat inflation, right? And, that's a super hawkish tone. And that's going to scare investors and markets. People are going to go away from, growth sectors, and they're going to go into blue chip stuff that's known to perform well during recessionary times or times when things get turbulent. I suspect that money is going to become very expensive to use, comparatively speaking, to where it was, right? And so, you're at 1.5% and you're on your mortgage right now, or 1.6 or 1.7%, and then you're refinancing in 2.5 years at 5%. Whew, you better start saving now, right? And that's kind of a scary thing to be staring down.
Yeah, absolutely. I think too, I mean, we started to see early softening even before any of the hikes. The sort of 2-year run was just starting to burn itself out. I think,
Mm-hmm.
um, the money printing had stopped as well. So money had printed, 25% new money into the system over the pandemic. And of course, those low interest rates. And so much of that went into the housing market. And that kind of pushed it up as high as it could go. And people were really starting to get tapped out. Prices were starting to just consider flattening out a bit.
But they often say one of the cures to inflation, the cure to high prices is higher prices.
Right, for sure. And that was the remedy for those last 2 years.
Yeah. And I kind of feel like the government's doing things now. Yeah, they're like having oh shit moments, and it's like, oops, we left it too far. I mean, I remember in January they could have flicked on the interest rate hike at that point just to see how, just to temper the market a little bit. And they held, and everybody was like, what are you doing? And
Yeah.
now it's like, well, now we're staring down 0.75, maybe. Who knows? I mean, it could be 0.5, it could be 0.75, it could be even more. I don't know what they're, certainly the tone isn't going to stop after the next hike.
That's it. And all these measures are kind of taking place at the end of the cycle as opposed to affecting it during. So
That's
again, it's
right.
sort of a too little, too late, or no, it's gonna be too much, too late is what it's gonna be, because they always
Mm-hmm.
seem to overreach and overextend the measures. And whoops, the pendulum's gonna go way too far the other way. We're gonna see it happen, and then they're gonna overcorrect on that side as well.
Well, and to your point, Dan, the Bank of America has come out and said they're predicting now that there's a 1 in 3 chance that the U.S. economy will slide into a recession because of overcorrecting, because they didn't do enough during the times when we're coming back out of this recovery. We didn't temper it enough, right? And now we're heavy-handedly trying to control it, and it's likely going to push it right back the other way and scare everybody off.
Yeah. So let's
Yeah.
think of what's happened here in the last 2 years. You've got overstimulating. Every dollar lost was reimbursed by 3 times. And then now it's the exact opposite, right? Now that, oh no, we need it all back. We're going to overcorrect here because we let spending and everything go too hot. But
I won't admit to
regardless,
that, though.
oh no, it's the war, dude. It's the war.
As a black swan event, couldn't see
Right.
that coming either.
Yeah.
Just like we couldn't see
Back to
oil
back.
prices going up when you cancel pipelines. But anyways,
Yeah.
whatever.
Okay, so again, let's have a quick look at the immediate effects here within housing, because that's largely what we are talking about today. And if you look at the sales volume in April, right? So let's remember that 0.5 hike happened on April 13th. And so the sales volume this month, we're recording this on April 29th. The data is largely in. We're sitting just under about 3,300 units sold in this month. And, this is a pretty big drop because, 30% less than last month. Yes, that was the biggest of all time as far as sales volumes goes, but it's impactful. Looking at it a little further, it is 3 times the amount of homes sold in 2021, but of course that was April of 2021 when things were shut down.
Yeah.
But again, they're elevated, but it's the trend I think that we need to focus on here, because it's still the second highest sales volume April in 5 years here. But again, it is dropping, and it's also going to be affected by the inventory, because we're seeing we cracked 9,000 active listings this month, and it's the first time it's been that high since October of last year. So not that far back, but still 1,300 more listings today than at the beginning of the month.
Yeah. And that's positive news. That's actually good news. I know it sounds like we need to return to balance. Unfortunately, what we're saying is we don't feel like the levers being pulled right now are going to return anything to balance. It's going to go like whoops the other way, quite potentially. So Great to see that we're getting inventory levels back. I mean, they're still low for um, context here. 9,100 is a decent number, but a balanced market looks more like 15,000, right? In December, we were at 5,500, right? So we're coming off of an incredibly low baseline. So even we're back up at 9,100. I mean, we're still seeing, for the right property that's priced right, we're still seeing a lot of competition, right? We're not getting away from that entirely, but we are also seeing properties that are listing and holding offers and just simply not getting any, and it's a lot more than it used to be.
Exactly. And that's the beginning of all sort of shifting markets is the dynamics and the behaviors change. And that's what we're seeing now. Yes, you will have the odd property that's going to get a lot of offers, but the average or the majority are not getting the interest they were 2 months ago. Not by a
Yeah.
long shot.
I mean, I can tell you right now, Dan, talking to clients who are looking at listing, I'm getting away from listing on the low side and holding offers, because buyers also just a lot of the last couple of listings that we've had that have been like that, they've just said, look, I if it doesn't sell, I'll come back in 3 or 4 days. And
Yeah.
and so when you have 30 showings and you get 2 offers or you get 1 offer, we know in our gut that this market has shifted. It's not shifting anymore. It has shifted, and it will continue down this path now.
Mm-hmm. So let's talk about the price, because this is obviously the indicator that people pay the most attention to. And I want to split up April into two: what happened before the rate announcement and what happened after, because it's very interesting. And we know the reason as to why it's interesting here. So first 13 days, the average price was basically 1.296 million. And that was about a $45,000 drop from the month before. So pretty significant. And the median price, about 957,000, about a $40,000 drop. Pretty significant. Then the announcement came, 0.5 rate hike. Again, on the tails of that 0.25 from the previous announcement. And prices and sales jumped up, so that after the announcement, the average price jumped till the end of the month at 1.377 million, up $36,000, and the median up 13,000 to $1,013,000. Now, why did that happen? Well, we are hearing these stories a lot. Rate holds. People have their 3-4 month rate hold with their mortgage, and they now have to, if they want to keep that rate, buy, because if they don't, things are a lot more expensive once that rate hold expires. Upwards of 5 to 8% of their buying power is reduced.
Not only that, Dan, I mean, if the qualifying rate goes up by 0.75%, even if you've got a rate hold at a certain, your qualifying rate's gone up, right? So you have to close your deal before the next rate hike, right? So people are seeing this and saying, oh my God, like, it's still more economical for me to spend the extra dollars and lock in this low rate over the next 4 or 5 years than it is for me to get a haircut, buy something less expensive, and pay more for the borrowed money.
Exactly. Yeah, and we've got a story about just that, and we're hearing it a lot. People they have to close before that rate hold, and that's almost a guarantee as to why we saw that increase of activity, because people just have to get those homes in and done, because they don't want to see that 8% or so reduction in buying power on the other side of that. So all in, average price about $1,341,000. That's actually the same as last month, but it is down about $5,000 over 2 months. But the median dropped about another $3,000. We're at $990,000 now, and that's down in $10K in the last 2 months. But essentially, while those aren't big numbers yet, again, this is a trend now, in essence, or at least a trend beginning, because we're seeing 2 months in a row where both of those indicators are going down. We'll likely see HPI flat or a little bit down this month. But it's the feeling, it's the sentiment, and it's the predictions of where things are going that we are absolutely calling, the peak has happened and it's on the way down.
We also know that it's going to get worse. The things that cause prices to go down are going to get worse, not better, right? So this is a developing trend, and it's going to continue likely for some time, persist for some time. So
Yeah. Now, things in the valley seem to be incredibly volatile.
mhm.
We just pulled some data on Abbotsford. The median price in Abbotsford is at $745,000 this month. That's down $300,000 in 2 months.
Oof.
Sales volume is about half. It was about 200 units sold, and it was like 430 the month before. Average price 888,000, also down about 210,000 in two
Whoa.
months. Like
Whoa.
these are massive numbers. Now, okay, something extreme could have happened. I only just pulled this data, so it's not that comprehensive yet. But my goodness, if this continues, or even if it stays there, imagine 300K disappearing essentially in a couple of months' time here in valuations. So things are going down.
Yeah.
We're going to talk a little bit about what's happening locally here too. Just last week, we had one of our listings under contract. Had immense metrics saying that it was going to do very well, or at least if it had been listed a couple months prior, it would have done very well. And by well,
Mhm.
we're talking about the amount of showings and interest and offers that came to the table. It got one offer, it was accepted, and the buying agent called me yesterday and said, "Hey, our clients were qualified for this amount, $1.2 million, a couple months ago. Ends up they can't afford that now, or the lender won't lend up to that amount with the down payment they have, and they had to collapse the offer."
This here you go. Here you go. I mean, this is the first of these kind of haircuts and these interest rate hikes taking effect, right? This is why people are trying to lock in their rates. And to that point, Dan, in the same week, we sell a townhouse, Port Coquitlam, was listed for 799,000 and sells for 982,000 in multiple offers because people are throwing money at something to try and lock in a rate.
Yeah.
And so the market is it's really spotty, right? Like it's really hard to know what you're going to walk into on any given day.
Oh, and even this too. So that same property. So I reached out to the other agents that had shown interest and said, "Look, this is available again." And one said, "Okay, great. We're likely going to offer on it, but we need to complete by X date because of that's the end of their
There you
rate."
go.
You know what
Yeah.
I mean? So they're hot to trot. But again, this is like this overlapping group of people that really want to buy, or they really wanted to buy for 1, 2, 3, 4 months, and this is it. This is their last sort of kick at the can, if you will, because the
Mhm.
people who had it under contract earlier had lost on 6 offers previous.
Well, and we shift downtown for a second and go into the condo world. And we had a listing go live on a Tuesday of last week, and we showed it 30 times. Ton of showings, tons of interest, and a great price point, 549,000. Right? Um, Honestly speaking, that's about as entry level as you can get in the downtown core these days. And 30 showings, tons of people requesting docs. We follow up on offer day with about 12 or 13 groups that showed real keen interest. One committed to writing an offer. And the vast majority of people were saying the reason why they didn't want to make these offers is because were tired of competing. And they going to come back, and I'll see you in a couple of days. And if it doesn't sell, then so the sentiment is so different now,
Mm-hmm.
right? So sellers, if you're listening to this and you're thinking of selling, you've got to change your strategy. It's just not going to work like that. So, pricing it to market, pricing it where the market might be going now, very different approach.
Absolutely, and gotta share as well. The inbox now is flooded with price reduction notifications.
Mm-hmm.
I mean, not 1, 2, 5, 10 a day. It's a dozen or more for sure.
Mm-hmm. Mm-hmm.
And I haven't seen those in 2 years. And
Yep.
now they are rampant. So prices are dropping in asking prices as well, very frequently, and across the board, across all property types. And I focus on a lot of stuff on the island for investors, places like Nanaimo, and just price reductions there as well. And of course, we're hearing almost identical sentiment in Ontario, especially Toronto area as well. The two markets, east and west, are acting almost in unison right now.
So, okay, Dan, how long do these things tend to last for? Like, what are we?
Yeah, so let's make some predictions here, Ryan.
Oh God.
And yeah, sure. Yeah, I think if we look to our 2022 predictions, we've already lost on the rate hikes. But hey,
Yeah.
but it's for the whole year, so we'll see where they land at the end of the year. Because hey, as we know, just because they're going up now does not mean they won't bring them back at some point here. But yeah, we look to history, of course, to kind of place a bit of estimates on what could happen, moving forward here. And so let's look at the global financial crisis and what that did to housing here in Vancouver. 2008, 2009, we saw a 16% price drop over 9 months. Okay, so almost 2% a month for that time span. And it was pretty, it felt pretty dramatic because that was quick. We're seeing 2.5% increases now, and that's dramatic. So to see it go the other way, it was very felt
Just
as well.
yeah.
And then it took exactly 12 months to regain all that it had lost, and then kind of obviously went on from there. Um, that was because of, oh, sorry, no. And then we jump ahead to the 2016, right? So then there was that next bull run, and then 2016 happens, and then 2017 prices running, similar to they were last couple of years, and the government stepped in again, created the stress test, the foreign buyer tax, property transfer tax was increased, school tax, all that stuff, and it caused houses to drop 11%, and we're talking HPI here, 11%.
Mhm.
And that took 2.5 years to recover that 11%. And then, of course, it went up 38 from there. But
I feel too that, so a couple things. One, I think the last correction where the government stepped in and prices dropped 11% had more to do, I think, with scaring off a lot of people with the government intervention into these things, right? And I think it took some time to restore some confidence that the government wasn't going to mess with everything. Um, Whereas I think in the global financial crisis, a lot of regulation came down and a lot of free market stuff was able to bring the markets back quicker. So I think, when you see a lot of overregulation, you see your government with their finger in the pie and not doing things in a competitive manner, like build more houses and take maybe a macroeconomic approach as opposed to another legal different law to try and change the process to slow things down. Like none of this makes any sense in dealing with a housing crisis, you know. So I think that those corrected for different reasons, but going forward here, the government's sticking their finger in things again. So I don't know. It's kind of scaring me. um, and then they're also doing this all at a time when it's the most irrelevant time to be doing it. We're putting in new cooling off measures. We're putting in all these different things, if you will, to try and change the way we buy homes. None of it's really going to change anything. At the end of the day, it's not going to correct prices. It's just going to make it more complicated for people to buy, right? And we got to be worried more about things like, why are mortgage applications in the States on their seventh straight week of falling, right? They're down 8.3%. And we're looking at the next month doing something similar, right? If we deal with the macroeconomics of it, I think we'd be much better off than continuing to pull levers. But anyways.
people certainly look to the government to kind of make a lot of big decisions. So, for example, when the governor, Bank of Canada, came out and said, look, we're keeping rates very low for a long time, and if you want to make some major purchases, now's the time to do it. And they did, right?
Mm-hmm.
That was April, May 2021, and we're up 38% since, kind of thing, or 30%. And then, of course, like you just said, right, 2018, when they said, no, we're going to clamp down and we're going to prevent housing prices, then they kind of, people listen, they're scared, and then it dropped. But
Well, the flow of capital goes away too, it goes somewhere else, different market, where there maybe
well, exactly.
isn't such government intervention, right?
Mm-hmm.
And I don't know. I just think they're doing this all at the wrong time. It took way too long for them to respond. They printed too much money, created too much demand. They poured fuel on a fire. I get that we had to stoke the economy to keep it going, but they left it too long.
So as far as a prediction goes, the house prices are going to stick very closely to interest rates, as that affects pricing more than almost any other factor here. So what does that mean? We're up 0.75 basis points already this year. To me, that's a 7 to 8% price reduction.
Mhm.
If that continues, if they do the 0.5, 0.75 or more this year, it's going to almost look verbatim, is how I'm seeing it right now. So let's say it's a 0.75. Now we're up a full 1.5%. That's going to equal around 15% price reduction in housing.
And what's important to realize is every time that they introduce a rate hike, it can take up to 6 full quarters for that rate hike to take its full effect. So that 15% could take a year and a half,
Yep.
right?
Yep. I think that's a fair time. I think it's going to happen quicker just because I think the pendulum is swinging too far too quick. I think the cycles are
Yep.
almost tightening. And I think, again, they're going to overcorrect big time.
Yep.
And
Yeah.
that's going to freak people out and it's going to drop. And then they're going to overcorrect the other way. But yeah, at this point, it's feeling like about 15%. Real estate market in Vancouver seems very resilient at a 15% price drop. 3 times in history, it's hitting that or a bit less before bouncing back.
Yeah.
I think a lot of people look at Vancouver real estate as being on sale when it's 15% lower than its previous high. And money seems to find its way back into the market, as well as, of course, government intervention. They don't want prices to fall, especially here in British Columbia with so much of our taxation going or coming from housing. So
Yeah.
they don't want to see it reduce.
I think it's important to realize the bull runs are typically much longer than than the bear runs, right? When you see the bears come out, it's anywhere from 1 to 2.5 years, right? Whereas the bulls can be 5 to 9 years, right? In some cases longer. And so while we're probably on the precipice of a price correction, it won't be forever like this, right? So
So what
it's
do you do?
important to remember.
So what do you do? If you're a homeowner, my advice is don't panic.
Mhm.
It's my last house. I held it for like 18 years, and I went through like 3 cycles and came out 275% higher than when I bought it. Um,
Yeah,
you
and
know,
that's the point. You don't buy real estate for a 1 year flip, right? I mean, the last 2 years were not normal in any sort of way, right? So when you typically look at buying a home, you should be buying it for no less than 5 years. And if you buy it for no less than 5 years, when you go through a price or a cycle correction, you're likely going to be okay, at least unscathed, potentially coming out the other end, right? Um, but over those couple of years, it might be a little bit more expensive for you to own that home than before. But these ownerships, like you said, Dan, 18 years, 275%, right? That's the kind of long-term gains that you can get out of real estate, and why we've always said real estate is for the long term.
Yeah. So if you bought last month and you're starting to see price reductions or price reducing numbers across the board, just don't panic. Who cares? Enjoy this great low rate that you're in, pay
Mm-hmm.
down your house, and look at the market when you're considering selling in 5 to 8 years, because what it
Yeah.
does between then may not be very relevant at all unless you're looking to refi or buy something else. But realistically, yeah, it's about not panicking. Cycles are cycles. They are expected. They've been going since the housing market existed. And chances are we're going to see, a 12 to maybe 15
Hope
month,
not.
15-month-ish down cycle before it flattens and possibly comes up again. But again, 15% is far from something to be too worried about in most cases. I mean, yeah, sure, there's going to be some outliers, but 15%, we just saw that happen again in the last 12
and
months.
let's not, you know markets don't just go up. We've been saying this for years. If you've been listening to the podcast, you know that markets just don't go up. There's corrections all the time, right? The stock market's the same, right? We're seeing this correction in the stock market is long overdue. It's not a surprise to people, right? Maybe the volatility of it could be, but everyone knew that it was kind of overheated. And the same is true in the real estate market. There's got to be some leveling out, a correction, and then we'll continue on into the next cycle. It's part of long-term ownership. It's part of the cycle.
Right. Okay. So why don't we maybe end this a little bit on the cooling off period that has just been put into legislation. Um, I was away for a few days, but I was kind of paying attention to this, Ryan. I know you kind of deep dove into it, so maybe you can
Yeah.
share your thoughts
Well,
and how this might even affect prices further,
yeah,
and
we've
which
talked.
way.
Well, yeah, we've talked a little bit about it throughout the episode here, but generally speaking, the cooling off period we knew was coming in. We didn't really understand the details, so we were waiting for the legislation to be released so that we could see the details, sort of like when does it come into a play? What cities does it affect? Are there financial penalties for buyers who make 10 offers and then pull out all of them? If so, what do those penalties look like? However, the government came out, released all of this, released the bill with 4 pages. And in the middle, where all the details typically are, there was literally nothing. So we've passed legislation with no details, and they can just add to it as they see fit as it develops. It's like, it's one, I don't really understand how that's democratic because I don't know how you're supposed to debate on the details of the bill and how they're supposed to impact things before you put them into law. This seems completely backwards, and quite scary in that respect, that they can just change the law because it's been passed. So I, in terms of what it's going to do to price, I don't think it was designed to do anything, to have any kind of impact on price. It was designed to try and better protect buyers, which it doesn't really do. It further, if anything, to the detriment of sellers. And I also think if you're going to try and improve conditions for buyers, you maybe got to look as the government to yourself. Maybe we shouldn't have printed as much money we did. Maybe we shouldn't have lowered the interest rates to the point we did. Maybe we shouldn't have told people to go out and buy everything like we did. There's got to be some accountability here too. And now trying to throw a change of process at a macroeconomic problem. I mean, you want to make it better for buyers, cool down the market. Actually do something that's going to cool down the market. Have an impact, right? Interest rates are already being turned up right now. So are we going to know if this is going to have any impact? We're not going to have a clue. So the timing of it is all backwards too. I mean, they even came out and said in the press release that they wanted to pass the bill early so that they could have it in time for a busy real estate summer. And
They did not.
yeah.
Oh no. Okay, so they're completely out of touch.
Well, so I was just going to ask you, like, what's the summer like in real estate?
It's the slowest part of the year, other than right around Christmas.
Yeah, it's when people go away. They're gone away on vacation. Their families are out of school. Think they're going to try and get houses ready for showings with their kids home? Come on. There's no consultation here with industry. That's what I'm getting at. It's incredible, the level of disconnect. I mean, the Real Estate Board of Greater Vancouver came out with a number of ideas and things that would actually work. And they're just turning it down because they're wanting to look at it from a finance perspective as opposed to the people on the ground who are seeing the problems. And we know the answers, Dan. We know the answers. We've been saying them for years. They don't change.
Okay. So that's where we are, everybody. Market has peaked. Prices are going down. Sentiment has changed out there. It's going to be a different ride. And again, it's being poked at and prodded, and levers are being pulled by people who essentially don't know what's on the other side of those levers. I think is
that's
one way of looking at it.
It's just for votes, anyways.
Yeah, of course. Oh yeah, the cooling off period. And look, things are cooling off. We did it. Yay. Yes. Like we don't even have to put details in, and it works just because we named it correctly.
Oh God.
Okay. Anyway, that's it for us today. Thanks as always for watching and listening. Look, things are changing, and they're changing rapidly. So what does this mean to you? Well, give us a call. We'll talk through it because it's definitely affecting buyers and sellers differently, and timing things and preparing correctly, can happen professionally and smartly in any market. And we're here to help guide you through your options. So thanks and have an awesome day.